Elon Musk decided to take Tesla public 10 years ago, offering 13,300,000 shares for $17 per share in an initial public offering, or IPO. With the stock currently trading above $370 per share, you could say the rest is history. However, the Palo Alto-based electric vehicle manufacturer has had a bumpy and at times contentious ride. Tesla has done amazingly well in the stock market, and several top investment firms like ARK Invest have made substantial profits from holding the company's stocks. Today in our video, we take a look at Cathie Woods, ARK Invest CEO, claiming that Tesla will hit $3,000 per share. Can Tesla hit the $3,000 mark? What factors would be responsible for Tesla's success in 2022? Let's have a look. Tesla's shares fell from $74.66 to $1,031.56 as investors responded to reports that Tesla erased indications of a 2022 production date for the Cybertruck from its website in December, a change observed by industry magazines as early as last week before reaching a larger audience on Thursday. Reuters reported early Thursday evening, citing a single unidentified source that Tesla now aims to begin manufacturing by the end of the first quarter of 2023. The dip in Tesla shares is only a knee-jerk reaction, according to Daniel Ives, an equities analyst at Wedbush Securities who covers Tesla. Experts believe there is a reason to be optimistic about Cybertruck's 2023 production date because he believes Tesla's Gigafactory Texas facility in Austin, which is expected to be where Cybertruck production will eventually take place, will begin production on other vehicle models in the coming week. Tesla CEO Elon Musk stated in November that he will offer an updated product roadmap for the firm, which some assume may include details on the Cybertruck, on the company's earnings call on January 26th. Tesla has never been very good at meeting deadlines, so it's hardly a surprise that the company's ambitious pickup, the Cybertruck, is running a little behind schedule. The company's website has removed a reference to a 2022 production timetable, and Reuters now reports that manufacturing will not begin until the first quarter of 2023. The Cybertruck was first revealed in 2019, with Tesla predicting that it will be ready for production in late 2021. Then, in August of that year, completing production was postponed until 2022. That deadline appears to have been waived as well. Despite the recent blip in the company's shares, Tesla bull and CEO of ARK Invest Cathie Wood is confident in her investing firm's $3,000 price goal for TSLA stock over the next 5 years. Of course, the momentum players fled as soon as the stock responded to the news and fell. For us, we've been taking profits on the way up and getting a lot of flack for it, and this is nothing more than a hiccup, Wood explained. Tesla stock was down around 14% last week, thanks in part to Elon Musk selling some of his holdings. The stock price may fall more this week as Elon Musk continues to sell additional Tesla stock. Musk has sold around 30% of his stake as of November 12th. Musk confessed that his low basis share selling rate is intended to get Twitter closer to maximum taxes. Wood feels Musk's choice to sell shares is sound. He has been quoted as stating, "I was the first in and I'm going to be the last out." Despite this, he faces a massive tax burden as a result of stock options. I'm sure he didn't want to use his shares as security for any additional loans, therefore I believe that's reasonable. I don't want him to feel pressured as a shareholder. I want him to feel secure and in a good enough form to execute the job, Wood said of Musk. Wood said in September that her base case for Tesla is $3,000. Our prediction for Tesla's success has risen. Their market share is the primary cause for this. Instead of declining from the end of 2017 to the present, it has risen significantly, Wood noted. Tesla was trading at about $733 at the time and would have to rise more than 300% to meet Wood's price objective. With a share price of $3,000, Tesla's worth would be $3 trillion, an accomplishment that may have appeared improbable to some. Tesla, on the other hand, surpassed a $1 trillion valuation in October after Hertz purchased 100,000 Model 3 vehicles for its rental fleet. Tesla's stock price has subsequently climbed dramatically, nearly reaching pre-stock split levels until Elon Musk stated he would be selling some of his shares. The other important thing we need to be talking about is the upcoming Tesla earnings report. We talked about a detailed breakdown of what to expect for Tesla stock earnings, so we have some important numbers that we need to be watching out for, particularly the delivery numbers, which are extremely important. The census figure for Tesla delivery numbers is estimated to be 276,900 vehicles, with 261,400 of them being the Model 3 in the Model Y, and 15,500 Model S and Model X vehicles. However, many various experts and people are guessing that this number might potentially be higher. The second big item we'll be talking about in 2022 is what Elon Musk mentioned about complete self-driving cars being adapted next year. So 2022 is going to be enormous for Tesla stock, primarily because, as seen by the bull case, price goals established by ARK Invest are primarily focused on Tesla's robotaxi. Analysts believe that if Tesla can crack full self-driving, they would generate at least $9 trillion from it. So ARK Invest is looking into different things when they come up with these price targets. They take into consideration the massive increase of Tesla vehicle productions and the growth of different technology, mainly this self-driving. Full self-driving robotaxis are going to be a game changer, not only for Tesla, but the entire world. So that is going to be massive, and we know that Elon Musk said that fully self-driving can be implemented pretty soon. Tesla is expected to make a big leap this year, and so does their stock. Last time, the major push of Tesla's stock came when Hertz announced a deal of about 100,000 Tesla Model 3 cars. Tesla's market valuation surpassed $1 trillion for the first time a week ago, when Hertz revealed the plans to extend the fleet of battery electric vehicles with an initial purchase of 100,000 Teslas by the end of 2022. Interim Hertz CEO Mark Fields stated that the rental business had discussions with Tesla about purchasing the vehicles several months ago. He characterized it as a wonderful connection and part of Hertz's commitment to lead rental firms in handling huge fleets of electric vehicles. During that period, Hertz even claimed that Tesla had started delivering the first few thousand cars, but Tesla and Musk were singing a different song. So what would be the major factors for a jump in Tesla's share price this year, and a possible $3,000 per share worth according to Cathie Woods? ARK Invest summarizes them as Tesla's gross margins, capital efficiency, and autonomous capability. So what exactly is gross margin? Net sales less cost of goods sold equals gross margin, or COGS. In other words, it is the amount of money a corporation keeps after deducting the actual expenses of creating the goods and services it sells. The bigger the gross margin, the more money a firm keeps, which it can then utilize to cover other expenses or repay debt. Tesla has been steadily expanding its gross margins, and its automotive segment now accounts for around 21% of its total revenue. The cheap cost of the Shanghai plant and the higher cost of the Model Y, despite the Model Y costing the same amount to produce as the Model 3, have both contributed to Tesla's quickly increasing gross margin. Next, we look at capital efficiency. Capital efficiency, or capital market efficiency, is the extent to which the current asset price accurately reflects current market information. It's a lot like gross margins. If Tesla spends $1 billion to build a factory, that amount is recorded on a balance sheet and depreciated over time. Every quarter, Tesla's profits would be reduced by a certain amount due to depreciation expenses. Finally, autonomous capability. According to ARK, there is a 70% chance that Tesla will not be able to create a fully autonomous vehicle and a 30% chance that they will. Within this 30%, they believe Tesla will start charging $2.50 per mile before dropping to $1 per mile. Musk predicted that Tesla vehicles would be fully autonomous by 2020, but it is now 2022, and while there have been significant improvements to Tesla's self-driving, it is still not fully autonomous, and it is unknown when they will achieve this. Autonomous capability refers to a system's ability to achieve goals while operating independently of external control. If Tesla can hit strong numbers on all three key inputs, then the $3,000 mark could be achieved. Elon Musk has finished selling his shares. Therefore, now is a fantastic time to purchase Tesla and predict a rise when we enter the second month of 2022. What do you think about 2022 and the possibilities it holds for Tesla? Comment below.